Here is your Bull and Bears stock of the week. Well, an airline and a cruise line company make up this week's Bull and Bear of the week. Shiraz Mian here with us once again to fill us in on the details behind both of these stocks. The airline is United Continental Holdings, and they've kind of cleaned up their act and streamlined pretty well, haven't they?
They have. In fact, it's a relatively good time for pretty much all the airlines. It's a tough business, and they went through some really tough times over the last few years. But for about a year now, the industry as a whole has been doing quite good, and that's one of the reasons why I have United Airlines, the macro improvement for the group as a whole. And number two, I have some company-specific issues for United itself as the reason for picking it up. So just briefly on the macro environment, the load factors are improving. The industry has been very disciplined on the capacity in front. They have been taking capacity out of the system, and the consolidation drive throughout the industry has been very helpful in that there's some questions about the economy and the consumer, but the overall outlook for the economy and the consumer, both here as well as globally, has significantly improved compared to where we were about 2 years ago. So this overall improving backdrop is rubbing off on all the players in the industry, including United. Now, United itself has been kind of a laggard in the industry in terms of its operations, in terms of its performance. But they have, as you rightly pointed out, cleaned up their act. The merger with Continental was a win-win for both of them. They had complementary routes, both domestically but particularly internationally. Continental was more levered to Europe and Latin America. United is more domestic in Asia. So no major overlap, particularly internationally. And both the companies have been telling the street that they could extract synergies of up to a billion, 1.2 or annually over the next few years. So overall, a very impressive outlook. In fact, this morning they had solid quarterly results, and they beat both on the top line and the adjusted earnings front as well.
You know, fuel accounts for the largest portion of this company's operating expense, but apparently they've been able to manage those fuel costs pretty well.
Yeah, industry-wide, the players have been able to price. We all as consumers have experienced those pesky little costs that they slap on us for bags and for this and for that.
Yeah.
And then United itself has been hedging some of its fuel exposure as well. So their ability to price and being relatively more prudent in risk management has been helping them in this oil price environment, which is very uncertain. But on the whole, oil prices remain the wild card for the industry as a whole.
Well, Carnival Corporation is that cruise line that I was talking about. They're the bear of the week. Now, this one surprised me a little bit because everybody who I talk with who's going on cruises tells me that these cruises are full.
They are. In fact, Carnival, I'll give you the negatives, but just a brief positive because I can't help telling the positive about the company. It's well run. It's the largest out there. It's the most diversified, both in terms of geographic markets as well as price points. They have discount, they have premium, they have luxury. Both here in North America, Europe, Asia, Australia. So a very well-run company, solid balance sheet, good dividend as well. But, and there's always a but, right? The but is the near term. The next year to 18 months, the outlook is quite iffy for Carnival, and two main reasons for that. And I wouldn't even go to the fuel costs that we briefly touched on in United, which is also a factor for Carnival.
Yeah.
North Africa, Middle East, and Southern Europe. So all the Mediterranean cruises are basically operating in an environment which is very unsettled and uncertain. So they have to reschedule. Folks are not booking as much, particularly there. at the European end of it, and they have a fairly significant exposure to that Mediterranean market. Now, it's peaceful on the European end, but the economies in Southern Europe are not doing really good, as we know about Spain.
Yes.
And Portugal, and now also questions about Italy.
Right.
So the economic questions about Southern Europe, the political turmoil in North Africa, Middle East, and then the issues related to Japan's tsunami, and then the recovery from that, and all this unsettling aspects. So overall, Carnival is a very good company, but the near-term outlook for the company is iffy and uncertain, and that's what's weighing on the company's estimates and earnings and profitability. And my sense is that these issues are not going away.
Interesting. We can provide you with the bull and bear of the day, in addition to the bull and bear of the week, if you go to our webpage, Zacks.com, our homepage, I should say, and you scroll down about midway to that page, and on the left side of the page, you will see a bear icon and a bull icon for the bull and bear of the day, and you can keep tabs on stocks that are in those categories daily on Zacks.com. With Shiraz Mian, I'm Terry Ruffalo.